Assalamualaikum warahmatullahi wabarakatuh. We, from the Accounting Study Program, Faculty of Economics and Business, University of Muhammadiyah, Tangerang, Indonesia, would like to present a research journal titled The Effect of Financial Distress, Audit Opinion, and Management Change on Auditor Switching. Group Members 1, Dimas Rohmawati 2, Dinda Julia Rakman 3, Nia Putri Awalia. Introduction. The auditor is obliged to determine with sufficient certainty whether there are substantial misstatements in the financial statements that may have been caused by fraud or error, as stated in SA 240 number 5. Because they are not required to take a position, show partiality, or be influenced in any way, independent auditors are essential in auditing financial statements. However, due to the existence of excessively long employment contracts, we often see cases where clients and auditors work together. Therefore, auditor replacement is a necessary procedure for companies to ensure the integrity of their financial statements and the independence of their auditors. Background companies listed on the Indonesia Stock Exchange, IDX, in the mining sector show a worrying trend of auditor turnover. In 2015, there were 32 companies that replaced auditors, then increased to 40 companies in 2016 and remained 40 companies in 2017. Especially in 2015, 11 companies changed auditors, but this number decreased to 5 companies in 2016 and increased again to 8 companies in 2017. In addition, in 2015, there were 10 companies, 8 companies in 2016, and 5 companies in 2017 that did not submit audited financial statements. The long-term relationship between auditors and clients can threaten the independence of auditors in evaluating audit data objectively. IDX data has been analyzed since 2019. Problem Statement 1. Does financial distress affect auditor switching? 2. Does audit opinion affect switching auditors? 3. Does the change of management affect the switching auditor? Methodology. This research uses quantitative methods. A total of 80 companies from the basic and chemical industries listed on the IDX are companies that are the population in this study. Data processing in this study uses eViews 12, which includes descriptive analysis, panel data selection methods for regression, including Chow, Hausman, and Lagrange multiplier tests, R2, coefficient of determination, simultaneous hypothesis testing, and so on. Research Result Descriptive Statistics Test Results. There are a total of 420 observations or samples used in this investigation, as shown in the table inside. Information was obtained from 71 sample companies during a 6-year tracking period, 2018 to 2023. 1. The Y variable, which is the auditor switching, gets a value between 0.0000000 and 1.0000000. Switching auditor has an average value of 0.21905 and a standard deviation of 0.409145. The X1 variable, financial distress, has a minimum value of negative 7.731656 and a maximum value of 786.9311. The average value of the X1 variable, financial distress, during the observation period was 4.142617, with a standard deviation of 40.936993. The value range for the X2 audit opinion variable is from 0.000000 to 1.000000. During the study, the X2 variable, audit opinion, had an average value of 0.995238 and a standard deviation of 0.068924. The value range for the X3 variable, management change, is from 0.000000 to 1.000000. During the study, the X3 variable, management change, had an average value of 0.404762 and a spread of 0.491431. Chow test results. The probability value of the cross-section of F0.0000 less than alpha 0.05 is displayed. Therefore, it can be said that this model uses a fixed effect model, FEM, which is more suitable than the common effect model, CEM. Hausman test results. The random cross-sectional probability value of 0.1526 greater than alpha 0.05 is shown in the table above. This indicates that the random effect model, REM, should be used, not the fixed effect model, FEM. Lagrange multiplier test results. The cross-sectional value of Bruch-Pagan is 0.0000 less than alpha 0.05. Thus, it can be concluded that it is better to apply the random effect model, REM, than the common effect model, CEM. Model conclusion. The random effect model, IREM, is the panel data regression model that will be used for hypothesis testing, based on the 3 tests that have been used as shown in the table above. Coefficient of determination and F, model feasibility. Test results. The R-squared value is just under 2%, or 2.0669%. Financial difficulties, audit opinions, and management turnover accounted for 2.066% of the auditor turnover variance in the basic and chemical industries in Indonesia, according to the value of the determination coefficient. Other variables that were not taken into account in this study accounted for the remaining 97.934%. It can be concluded that the independent variable, X, has an effect on switching auditors in the basic and chemical industry sector because the F statistical value of 2.926521 is greater than the F table is 2.626352 and the probability value, F statistics, is 0.033578 less than 0.05 minus H0 and accepts HA. UJIT partial test. Analysis. Test results and discussions. The findings of the t-test, partial test, can be understood from the following table. 1. The results of the t-test on the financial distress variable, X1, were obtained as 0.746735, less than 1.965655, and the SIG value was 0.4556 greater than 0.05. Then H1 was rejected, meaning that the financial distress variable had no effect on the switching of auditors in companies in the basic industry and chemical sectors. 2. The results of the t-test on the audit opinion variable, X2, obtained T were calculated as 2.519437, greater than 1.965655, and the value of SIG 0.0121 less than 0.05. Then H2 was accepted, meaning that the audit opinion variable had a negative effect on the switching of auditors in companies in the basic industry and chemical sectors. 3. The results of the t-test on the variable of management change, X3, were obtained as 1.370523 less than 1.965655 and the value of SIG 0.1713 greater than 0.05. Then H3 was rejected, meaning that this variable had no effect on the switching of auditors in companies in the basic industry and chemical sectors. Panel data regression equation after t-test y equals 0.87955711610 plus 0.0003471699093 times x1 minus 0.694605487867 times x2 plus 0.054865085161 times x3 plus left bracket cx equals r right bracket. The explanation is as follows. 1. The value of the constant 0.87955711610 can be interpreted that if the independent variable increases by an average of 1 unit, then the dependent variable will also increase by 0.8795571161106. 2. The value of the regression coefficient of the x1 financial distress variable is plus of 0.0003471699099233, so it can be interpreted that if the x1 variable increases, then the switching variable auditor y also increases by 0.0003471699099233, and vice versa. The value of the regression coefficient of the x2 variable of the audit opinion is negative of 0.694605487867, so it can be interpreted that if the x2 variable increases, then the switching auditor variable y will decrease by 0.694605487867, and vice versa. The regression coefficient value of variable x3 of management change is plus of 0.0548650851641, so it can be interpreted that if variable x3 increases, then variable y auditor switching also increases by 0.0548650851641, and vice versa. Discussion 1. The results of the t-test for the financial distress variable x1 produced a calculated t-value of 0.746735, which was smaller than the critical value of 1.965655. In addition, the significance value of 0.4556 is greater than the significance level of 0.05. Therefore, we reject the alternative hypothesis, H1, which shows that the variable of financial distress does not have a significant effect on switching auditors in companies in the basic industry and chemical sectors. The findings of this study are in line with previous research, Hestian-Yingxi, 2020, which states that companies that experience financial difficulties often avoid changing auditors. This is because these companies prefer to minimize the costs associated with new audit assignments, such as the cost of familiarizing a new KAP with the company's industry. Thus, they aim to reduce the financial pressures and challenges they are currently facing. 2. The results of the t-test for the audit opinion variable x2 produced a calculated t of 2.519437, which was greater than the critical value of 1.965665, and a significance value of 0.0121, which was smaller than 0.05. Therefore, we can accept H2, which shows that the variable of audit opinion has a negative effect on auditor switching in the basic industry and chemical sectors. The findings of this study are consistent with research conducted by Ramadan et al. 2022. According to him, audit opinions have a negative effect on the switching auditor because management realizes that external auditors working in the company are professional and independent parties entrusted with examining and evaluating the accuracy of financial statements in accordance with relevant regulations and legislation. 3. The results of the t-test for the management change variable, x3, produced a calculated t-value of 1.370523, which was smaller than the critical value of 1.965655. In addition, the significance value of 0.1713 is greater than the threshold of 0.05. Therefore, we reject H3, which indicates that this variable has no effect on auditor switching in companies in the basic industry and chemical sectors. The findings of this study are in line with previous research, Ramadan et al. 2020. The results of the study show that when a company undergoes a change in management, there is often no change in policy. In particular, the study highlights that companies are more likely to retain their public accounting firms if they are satisfied with the performance of external auditors and if they match management expectations. Conclusion and recommendations 1. Financial distress has no effect on auditor switching in the basic industry and chemical sectors listed on the Indonesia Stock Exchange in 2018 to 2023. 2. Audit opinions have a negative effect on switching auditors in the basic industry and chemical sectors listed on the Indonesia Stock Exchange in 2018 to 2023. 3. The change of management has no effect on the switching auditors in the basic industry and chemical sectors listed on the Indonesia Stock Exchange in 2018, 2023. Researchers suggest developing research by adding company size, auditor tenure, and audit quality variables. And researchers suggest conducting deeper interviews with company management. Auditors and other related parties can provide a deeper understanding of the reasons behind the auditor switching decision, as well as conducting case studies on companies that experience auditor switching, can provide a more detailed description of the factors that influence these decisions. Advanced research, limitations on research time, energy, and researchers' ability. Researchers only use company samples in the basic and chemical industry sectors, so that the research results do not apply to all types of companies. The conclusions drawn are only based on the acquisition of data analysis, so it is hoped that further research on financial distress, audit opinion and management changes on auditor switching with different research methods, a wider sample, and the use of different and more complete research instruments. The theory used in the study may not be fully able to explain the phenomenon of auditor switching, so the results of the study may not be consistent with the existing theory. Thank you. That concludes our presentation. We apologize for any shortcomings. Wassalamu alaikum wa rahmatullahi wa barakatuh.